Hit a cheeky little banger today. Another dub. Well, not another, because we haven't traded anything in the past 2 days because price action has kind of been shite. But we're practicing our patience. It's a good thing to be able to sit on your hands. So this is the first trade I've taken this week. I know Powell is speaking at 1:30, so usually you got to be a little bit more careful with days like today. Price will tend to just chop around until red folder. So I said, okay, I'm going to sit on my hands unless I see something I really, really like. And that's what happened. I saw something I really like. So let's dive into it. Let's sort of go over the charts, go over what I saw. And the first thing I saw going into the day was that we had this massive volume imbalance here. So we had this massive imbalance, and as you can see, we literally hit equilibrium of this imbalance perfectly. So we bounce off equilibrium of this imbalance, we hold it, get a very bearish reaction out of it, and then going into the day, I start marking up key levels that I want to see price bounce from, and in this case, we had a beautiful 15-minute bearish fair value gap right here. So before market open, I have this marked up, and I'm waiting for this higher time frame zone, this higher time frame PD array to get hit, and then I'm going to start looking for trades out of this or reactions out of this to the downside. So as soon as we enter this bearish 15-minute fair value gap, I hop onto the 1 and I start trying to cook. I start trying to take a cheeky little trade, start looking for my entry model, the 1 minute, not the 1 minute, but the inverse fair value gap. I typically take it on the 1, 2, 3 minute. And in this case, we get a setup right here, although I did not take it, and I'll tell you why in a second. But this play was clean, man. This play was clean. We're in that bearish 15-minute. We have some nice targets below. We have untapped London lows and Asia lows below. And something I really liked about this play, to be honest, was the fact that we take this high and we don't displace above it at all. Like, this is clear manipulation to me. We maybe wick above this high by about 2 points and then immediately start reversing to the downside. So this was a super obvious manipulation leg, in my opinion. We close back below this 1 minute and then we proceed to take a shit. So this would have been your break-even point here. Your entry would have been the close below the 1 minute and would have looked a little something like this, and then you can pick your target. But enough about this trade. We didn't take it. This was the trade that we ended up taking on the day. So we had this super obvious 2-minute fair value gap right here. There we go. And what I liked about this fair value gap was the fact that we held it to the upside. So we tested this and we held this fair value gap to the upside before closing below it. So if you hold a fair value gap to the upside and price shows that it's respecting the fair value gap, odds are it's also going to respect this same gap to the downside. So that's what happened in this case. We closed below on the 2 minute, and this play looks great. It looks great, but what made this play even better and what gave me the confidence to take it was the fact that if you look at ES here, and it's really important to look at ES, man, for extra confluences sometimes, but we had perfect equal lows below, and this is such a powerful liquidity pool. Price will hit these liquidity pools, these super obvious equal lows, 9 out of 10 times. Like, it's very rare that we just leave perfect equal lows in reverse. So I noticed that we had perfect equal lows on ES, meaning that ES was probably going to take it, which meant that there was more room to the downside on ES, which also meant that there was more room to the downside on NQ, because a lot of the times these instruments will follow each other. So what I did was I waited for the 2 minute to close. We got the 2 minute close, and then I waited for a retracement back into the fair value gap. So let's just play price a little bit. I entered on the retracement here. This was my entry. Bang. And then a stop would have been above this order block here. And this is another thing that I really, really love about this trade, is the fact that, so yes, I did enter on the 2, but then I managed the trade on the 1 just because this order block was super clean. So whenever we have an order block inside of an inverse fair value gap like this, it is super beneficial to you as a trader, or at least when you're taking these setups, just because it gives you an opportunity it gives you an opportunity to reduce risk. If we're truly bearish in this situation, we should not be closing back above this order block. So in this case, this allows you to put a hard stop above this order block here and allows you to increase your risk to reward. So I personally love it when we put in a order block inside of the inverse fair value gap, because it just gives you an opportunity to tighten your risk. So in this case, hard stop above the order block, and if we did a stop above the actual 2-minute, look at that. Now you're looking at close to like a 1-to-1. But in this case, we have this order block. We can drop down a little bit, reduce that risk. And again, like I said, if we're truly bearish, this order block will hold. And in this case, it does. And I believe we took, oh my God, we took everything off right about here, right at this wick. So we caught nearly a 1 to 2.5, super solid trade. And what gave us the confidence to take this again was the fact that we had these equal lows on ES. So as you can see, ES trades back into the, I don't know if there was a 2 on ES as well. Let's take a look. Yep, so there was a 2 on ES as well. It was a bit bigger, but as you can see, ES again closes below the 2, trades back into this order block, and then bang, takes these equal lows. So these equal lows on ES that were left behind gave me the confidence to take this trade on NAS, and we banked. We made about $500 on the day with 7 micros. So that was Wednesday summed up, first trade of the week, and really just trying to practice patience, man, practice patience. And not taking this trade up here was an example of practicing patience. And one question I like to ask myself before I take a trade is, if I lost this trade, would I be upset with myself? Would I be pissed off? And in this case, I would have been a little upset at myself. This is clean, but this fair value gap is just so small in my opinion. It's so minute that if I did take this trade, I would have been fairly upset. But for example, this 2-minute, this was too clean to pass up, and if I were to lose that trade, I would have been okay with that. If I lose a trade following my rules, I am okay with that every single time. I have no problems losing a trade if I followed my rules perfectly. So that's something you guys got to ask yourself if you're having some troubles in the future. If a setup looks decent but you're unsure about taking it, just ask yourself that question. If I took this trade and it was a loser, would I be pissed off? Would I be mad at myself for taking it? And if the answer is yes, probably better just sit on your hands and wait for another setup, because another setup will always come, and that's an example of waiting for the perfect setup. So that was Wednesday summed up, and I'll catch you guys in the next one.